So I've recently sat down with Jordan from Magnitude Finance, who I finance all my cars with, including my new Lamborghini Performante Urus. I wanted to ask him all the uncomfortable questions, like, can you just make your commission stupidly high and just make a killing on it?
You need to be careful with this one.
So you guys know all your options when financing your cars. So I put together a list of all the things you guys should look out for. Let's talk finance and cars. There's a lot of terms that get bounced around, APR, HP, PCP. I'm gonna ask you what each of these mean so people at home know and they understand them. Treat this as finance for dummies, and I'm one of the dummies. Right, so let's start with APR.
APR is the annual percentage rate. So let's say you borrow £10,000 with 10% APR and you're borrowing it over 1 year. So you put 10% of that value of £10,000 on top of it, and that's the total amount that you're paying back. So there's £11,000 that needs to be repaid over that period of time.
Okay, so it's £1,000, which is the APR, which is the 10%.
10% of
the £10,000. Okay, what is HP?
HP is hire purchase. So the name is slightly misleading because it's not hire. You are looking to buy the car, but you only become the title holder once it's been paid in full. HP is paying the balance from X to Y all the way down to zero.
£12,000 over a year period, it means every month you are paying £1,000. So at the 12th month, it's now zero.
Correct, yeah.
Okay, brilliant. PCP.
Personal contract purchase. So this is where you may make an initial deposit. You may also not, so you can go in with zero. You'll have monthly repayments of X depending on how much you borrowed, but then you will also have a final payment to make at the end of the term. So say you're borrowing over a 3-year term, you borrow £30,000 and there's £15,000 due at the end of it. That is a guaranteed future value linked to the car, which means that as long as you stay within your contract mileage, you can hand back that car at the end of the agreement.
Okay, but that is called at the end a balloon. So what is a balloon payment?
The final amount of capital that's outstanding after the term. So you borrowed £30,000, you've only paid off £15,000 of it after 3 years, and then on the last payment, you've got the other £15,000 that's due.
So they do allow you, so at the end of the term when you have that balloon payment, let's say you want to continue, you want to keep the car,
yeah,
and you're like, can I refinance it rather than having to pay that big balloon payment? They'll be like, nope, and they just structure a new deal in place and then go again for another 2 years with another balloon at the back end.
A lot of lenders do offer that service, yeah.
What is premium?
Premium is where the car is valued in the second-hand market or used market over and above what it was worth at list price.
A great example is my Urus. It's £250,000 give or take change, and I can get £100,000 over for that car. So that £100,000 over is premium.
Yeah.
So in other words, I can make 100 grand on my car if I want to get rid of my car today. Credit. Everyone has a credit score, and this shows whether you're worthy of borrowing money and paying it back. There are several ways of improving your credit scores, like getting a credit card and paying that back every single month, or getting a phone contract, or even being registered to vote. But there'll be another video coming out on that very soon. Can anyone get finance?
Yeah, if you're looking after your credit, if you're paying your bills on time, you haven't incurred any county court judgments.
County court judgments are also known as CCJs. And you may remember in a previous video when DMO spoke about that.
I have bad credit. I can't get no finance or nothing, but I'm sorting that out now anyway. A couple of CCJs here and there.
Okay, because we all make mistakes in life.
Of course,
okay,
and they just got parking fines and stuff like that. I just need to get them sorted.
So that is a big deal, and you don't really want to have that on your name, especially when it comes to getting finance, because that is the first thing they will see.
Haven't defaulted on anything like a phone bill or a credit card or anything like that. There's no reason why you can't get credit, but there is a limit to that. So say if you're on £30,000 of income, you go to buy an Urus Performante, there's got to be some question marks about how do you think you can afford it, because £30,000 over a 4-year period does not go into a £250,000 car very easily, as I'm sure you can imagine.
A lot of people say I've got the best credit, you know, they go on Experian.
Yeah.
Okay, and theirs is 999. I know mine is not 999 because I know people do searches on me when I buy properties or when I do finance. So obviously my credit might be 965. But just because you've got a 999 credit doesn't mean you can just go and finance any car you want.
Yeah, that's right. I mean, a 999 credit score is good. It generally means you are going to be keeping up with what credit agreements you've got. Everything's being paid on time. Brilliant. Good start when buying a car. But the problem with that is these lenders are using their own internal scorecards as well. So you might be a 999 to Experian credit expert, but one of these funders might have you slightly lower because, say, you're using a little bit too much of one facility that you have, maybe a credit card or something. Maybe you've already got a couple of cars in your name, it's suggesting you're a little bit more indebted. So these guys don't tell brokers or the customers exactly what is on their credit score or what justifies a credit score, but they do use something slightly different to what Experian will be telling you or any other credit reference agency you use personally.
Yiannimize comps. So guys, I know this is not an official way to buy a car. However, if you want to win this bad boy on the Yiannimize competition's website, it's available. You can head over there right now. Let's have a listen. Yiannimizecomps.com to win this Lamborghini Urus. Good luck. Back to the video. So I released a video before on all the options you have when buying a car, whether it's renting, leasing, financing, or buying the car outright. If you haven't seen that video, click on the top right-hand corner to see that video in full. Okay, so let's say I'm 25 years old.
Yep.
I want to buy a 40 grand car. So let's say a BMW M2 as an example. And I want to finance that car over a 3-year period, okay? When I'm looking online, what are the things that I need to look for so I don't get caught out first of all and I don't get ripped off, but I know that I'm going with a good company and I can get myself the finance so I don't lose the car that's up for sale?
One thing to look out for is, and you do see this quite a lot on social media, is sometimes you get a headline payment put up. So you might say something like, we get you in this car for £399 a month.
Amazing, sign up.
The question they got to ask themselves at that point is, right, I'm paying £399 for that month and for the next month and so on and so forth, but what am I paying in total? You always have to think about what's the total cost of this going to be for me for the duration of me being in that car for. Don't just get excited by the small monthly repayments. Got to do your research on it. You should be able to see everything from the cash price of the car to the total amount repayable and everything in between, including interest rates, repayments, etc., etc. So you should also see that they are regulated by the FCA. They should have the regulated FCA number on there. Those would be the things to keep an eye out for.
You don't want to be the wrong way round on finance, because that is where, if they take that car off you, you've now got bad credit, you've got a CCJ against your name, and then to try and go and get finance or credit anywhere else, forget a car for a property or even a phone.
Yeah.
You're screwed.
You want the right combination of paying off capital with a reasonable interest rate and a reasonable balloon if you are monthly repayment driven. You don't want to end up in negative equity.
Is it worth taking a loan out to buy a car versus financing a car? What about if they've got really good credit with their bank? Can they go to their bank, borrow the money, and then use it for the car?
In theory, I suppose they could. There are occasions where some lenders ask to see where the deposit is coming from, if it's a large amount of deposit.
So money laundering.
Yeah, it's certainly one of those things that would come up in conversation, but I think it would also probably put a lender off if they saw that you're having to borrow money to pay for the deposit to fund the car. So taking out 2 loans to fund 1 car, not a very good practice, I don't think.
Okay, that makes sense.
If you've got the money available for the deposit, just use cash. But again, it can vary depending on the price of the car. I mean, if you've got a £10,000–£15,000 car that you want to buy, you may be able to find, if you go speak to your bank, they might be able to get a better interest rate than what car finance companies are able to offer anyway. So in that situation, that's where borrowing from your bank can work. It's only going to be like a hire purchase, you pay it down to 0, there won't be any balloon payments available.
Yeah, so theoretically, you'd buy the car outright, but the money borrowed is with the bank. So that car theoretically is yours, and you can do what you want to it.
The banks are only going to lend up to a certain value anyway. On personal loans, I'd say it's like, you don't see too much more than like 30k for your average consumer.
And they don't understand the car market. They wouldn't understand that an Urus is this and a BMW is that, and they're lending it to you. Again, it's a piece of paper saying, well, this car looks like it's valued at this, that is what we're giving you, rather than someone knowing that, well, that car actually is going up in value, or that's got a premium on it.
Explaining premiums to some finance companies can be quite tricky at times. I mean, let's use like a really extreme example, like a LaFerrari Aperta. When they were coming out a few years ago, they were about 1.8 million euros. The next day, that car could arguably be worth 3.5 million euros. So technically, there are probably some funders who would recognise that, because they know that there's not too many of those about, and they'd probably lend more than what it was worth the day before. So premium is an interesting one. You've got to speak to the right funders for that sort of thing.
How interested should you be in interest rates? What is a key thing to look for anyone that is financing a car?
The obvious one is interest rate. Yeah, you don't want to be paying too high, but do your research on that, because what might be high now isn't actually that high, relatively speaking, compared to what's available out there.
How does an individual like myself know what a high interest rate is?
Worthwhile having those sort of discussions with a finance broker, because they should be able to give you the advice on what a high interest rate is at the moment. Magnitude, we are able to offer as low as 7.9 in some instances, but there are also some instances where that 7.9 isn't available for a credit reason, so the next best available funder or the second best available funder could be at 9.9. You may not get on board with them either because of their credit appetite. So we may only be able to offer you 11.9s.
Okay, so I'll ask you this question. Buying a property where it's a mortgage, and buying a car where you finance, you can get a mortgage for 4%, 5%, around there, but a car's pretty much double that. Why can't I get the same rate that I'm getting on my house versus my car?
If you think about it from like the lender's point of view, so what the original source of that money, if you've got something that's bricks and mortar, it's not going anywhere. So the risk attached to that is considerably less than a Lamborghini that does 200 miles an hour and runs on tiny explosions under the bonnet. So if you think about it from that point of view, then you could argue that there's a lot more risk attached to a car, therefore that if they're going to lend money against it, they want to have a reasonable return going against it as well.
So the risk. Okay, that's a really good answer.
It's one of the factors involved as well, but there's probably more to it.
What are the hidden costs and what does the small print say? So obviously we know you're going to have a deposit, we know you're going to have a monthly, and you know you're going to have a payment at the end, assuming that you're not giving the car back. Is there any other hidden costs that we should be paying or we should know about?
Yeah, with PCP, for instance, there'll be an excess mileage charge. So when you're speaking with your broker or with your dealer and you're saying, yeah, I'm going to do 10,000 miles per annum, so 40,000 miles over a 4-year agreement, but then you end up doing 45,000 miles, you need to have a look at the T's and C's of that contract to see what your excess mileage charge is, because they are going to bill you for every mile that you go over. Could be as low as like 3, 4, 5p a mile. Sometimes it could be as high as 18, 19, 20p. Times that by 5,000, it adds up pretty quick. So that's one thing to be mindful of.
Okay, what about admin fees and things like that? Should they be charging like £300-400 for an admin fee or £100?
Can vary between funders. Again, most of the consumer funders, there probably isn't going to be an administration fee at the front. There'll be an option to purchase fee at the end, which is basically the last tiny little fee that you pay in order to gain title to the car. More often than not, it'd be £10, so it's not too bad. But some of the lease purchase funders, for the high net worth individuals, for the businesses, you will notice that there are administration fees at the front end as well. Sometimes that can be because they put their own tracker on the car, so they're just trying to reimburse some of the costs there.
Okay, where do you, as the broker, make the money?
We are remunerated by the funders. So it's essentially, you could argue it's built into the interest rate that we're offering, but they just pay us a fee linked to the balance that we're funding.
So is it a percentage?
Yeah.
Okay. Can we ask what percentage that is?
It does vary substantially. Depending on the type of finance agreement, we can go down. So for instance, can I use yours as an example?
You can use mine as an example.
So obviously we would looking after you, because Simon asked us to look after you as well. So we basically worked the APR down in order to get to a reduced, well, we didn't take much out of the deal basically, because we just wanted you to get an APR.
So it's a value exchange.
But that only worked with that type of funder who do unregulated finance. So they allow us to move the interest rate down if we want to. Okay. With the consumer funders, we will take a percentage of the balance to finance. It's the same percentage across the board. But again, for instance, if that customer turns up and says, right, how much commission are you making out of this? Commission disclosure is about to come into the industry. So it's all going to be made aware to consumers very soon. But if that customer says, right, I don't want you to earn any commission, we say, okay, fine, we won't make any commission. What's my interest rate? It's still the same interest rate. So we offer the same irrespective of whether we take commission out of that deal or not.
Because you're FCA regulated, you're obviously obliged by the laws and the rules, etc. Can you just make your commission stupidly high, just make a killing on it?
Yeah, you wouldn't get any business because it's got to be reflected in the APR. That commission from the funder has to come from somewhere. They're just not going to give it to us for the sake of it, just because we're selling a few low value deals.
But can't you hide that in the monthly payment so you actually don't realise? Because as I said, I'm talking from back in the day, from when I used to deal with loads and loads of players and they used to finance cars. When you look in the small print, you're like, wow, that person took 10 grand commission on that deal, and you'd never know you paid that 10 grand because it was hidden in the monthly payment or it was hidden in the deposit. And that is what people are scared of when they go and finance a car.
That is, yeah, that's quite an old school thing that did used to happen, to be fair, especially with footballers. But a lot of that has been moved out by regulations. So these regulated contracts, this is exactly why it came in, because before APRs, total amount payables, all of that stuff didn't necessarily need to be displayed on the loan agreement. Now that it does, I mean, those unregulated documents that we were just referring to, they don't necessarily have to be on there, but that's why you need to have that very open discussion with your finance broker or whoever you're dealing with to find out what the total charges are.
Can a broker save you money? Some people might say, you know what, I'd rather go and finance directly from Lamborghini, Ferrari, Porsche, Bentley, Aston, rather than going through a broker. Is there advantages and disadvantages to doing that?
Yeah, sometimes the manufacturers may legitimately have the best finance package available, but what I would say is in the current climate with interest rates, in this constant state of flux, it's a bit more of a broker's environment.
Because you've got multiple people you can choose from, whereas the dealer have only got one person that's financing.
A broker doesn't work for one funder. We have a panel available to us. So let's say for argument's sake in magnitude, we probably use 12 to 15 different funders at the moment. Some of them specialise in PCP, some of them specialise in HP plus balloon. So we use that panel to basically work out what the best deal for that customer's needs are.
Online, there's a zillion brokers, zillion. You search up and they're like, we'll get you finance for 6% and we'll do this and we'll do that. How do we know who's telling us the truth?
Car finance is a £22 billion market, right? So there's a lot of brokers out there, and I know a lot of them as well. And there's a lot of people who do a good job. There are also some who probably don't do quite as good a job, quite as honest a job, but at the same time, you just need to get a feel for those people. So best thing to do, I think, always pick up the phone, make an inquiry. You'll get a read off people quite quickly on the phone. And yeah, with the amount of information that we're required to show to a customer, the more information you get back from them, the more they show you, the more you're going to be able to trust them.
What's the biggest scam a broker can do?
You know what, this is going to be around unregulated finance, because unregulated finance for businesses and high net worth individuals, you may not get the same amount of information shown even on the loan documents.
Because it's unregulated.
Because it's unregulated. So it will show you what the interest charges are, but it may not give you a direct APR attached to it. So those are the sort of questions, like as much as businesses and high net worth individuals probably do require less protection than consumers, they can be susceptible to, it's not trickery, but like they may not get the same level of honesty. So that's why it's always important, keep asking questions. People will give, like, if you don't feel like you're getting an honest answer back, get your back up.
And you have to by law give us the APR, what we're paying, and all the information is obviously readily available if we ask for it. If they choose not to give it, or they choose to hide it in the fine print, that's on them.
If you ask us to provide you with the information, we're going to give you the information for it. Simple as that. You can't start hiding things from customers.
So guys, that is the end of this video. Jordan, thank you so much, man. I appreciate you. Guys, I hope you enjoyed this video. I hope it was educational. I hope you learned a lot. I actually learned a lot as well. We've got more content to come in the new Yiannimize Media Suite. I'll see you on the next one. Take care, guys. See you later.